Okay, welcome to my office. Welcome to my channel. This is the Trading Test Lab where we test YouTube trading strategies to see if they are as profitable as they claim and see how good they really are. So today I'm going to be testing a strategy from my trading journey called Best Tradingview Indicator for Scalping gets 96.8 win rate. That is pretty crazy. So we'll see if we actually get this number. I highly doubt it, but when I went through the video and went through the strategy itself, I do think it's going to be a profitable strategy. I do think it's a good strategy. It's very simple, and you want your trading strategy to be simple. One nuance about this strategy and how I'm going to be testing it is the way he has it set up is you're using the Heiken Ashi candles. Apparently in TradingView, you can't bar replay with Heiken Ashi candles. So I'm going to have to do it on Candlesticks and see how the results are, see if it will still be profitable. I usually use FX Replay is my backtesting software that I use, but the indicators we need are not on this software. So we have to deal with TradingView, and TradingView doesn't allow Heiken Ashi candles. So we're just going to make it work. So how the strategy works, it has two indicators. There's one called the Chandelier Exit, and then there's one called the ZLSMA. And you use these two in tandem to get your entries. So how the strategy works is the two indicators give you two different things on the chart. So it gets you this buy and sell signal and this moving average. So what you're looking for is obviously the buy and the sell signal, but also where the candlesticks are in relation to the EMA. And that's when you find your entries and your exits. So in this example here that is showing, you get this buy signal, price is above the EMA, so that's when you take your long position. Stop loss, he says in the rules, stop loss below the previous swing, holding the trade until price crosses over the EMA. So right here, he would have closed it out. So those are pretty much basically the rules. I'm going to set up the indicators and then we'll start testing. And I have everything written down here. So, another thing, the way I'm going to backtest is, I'm going to backtest it how I would trade in the real market. So I only trade the New York session, so I'm going to backtest in the New York session. I only take one trade per day, and I trade after 9:35 a.m. candle. I advise that if you're going to be backtesting any of these YouTube strategies, backtest the session you trade. I'm willing to bet you don't trade the London and the New York and the Asian session. That's just going to give you inaccurate data. Since I can't go too far back in TradingView on the 5-minute chart, we're going to be backtesting Q3 of 2024, so from April to June. And I have the rules here, so let's set up the indicators. The first indicator is called Chandelier Exit. So let's put that on here. Chandelier Exit by this guy. And we need ZLSMA. Now we gotta input some different settings. So in the chandelier, we're going to change this to 1. And then we're going to change this to 2. And then we take off everything except for the buy and sell labels. Everything else is gone. And then for the indicator 2, the ZLMA, we change the period, the length to 50. Those are the rules he had, so that's how we have it set up. So we can remove this now. We don't need this anymore. We can't switch it to the Heiken Ashi candles. Only trade New York session after 9:35 a.m. One trade per day. Trading Q3 on the 5-minute charts. Here's the rules for buys. You look for the buy signal. Price action is above the moving average. Stop loss below the swing. Exit when price action crosses back over the EMA. But I think I'm not going to do that. I'm just going to have a set TP, which is going to be 1.5 to 1 risk reward ratio. And we're just going to do that for Q3. Let's get started. Okay, so with the hourly candle, this is the 6 a.m. handle. Oops, when we went too far here. But 6:30 exactly, so we will wait for this candle to close. So we are in sell. Oh no, we're in buy condition now. So this is a buy setup here. You have price above the EMA. You get the buy signal, so you would take a long position. This will be our one trade for today. Price below the swing. Go for 1.5 to 1. Let's see how this would play out. First trade would have been a loss. Let's log this trade. Okay. Let's go to the next day. So 5 a.m. candle. closed. We're in sell condition right now. On a 630 candle right here. We are above the EMA right now, so we cannot take a sell. Okay, we closed below it. So here's the trade we're going to take. Short position. Above the swing. 1.5. And let's play it out. So looks like it is a loss as well. So far, 2 losses. Let's go to the next session. Okay, buy signal. Price closed above. Let's take a buy below the swing. On position, stop loss. Below the swing. 1.5. There you go. So we got a win. Plenty win. Next session. Is it close above? But it wasn't in the house for a sell. We should have took the sell right here. Plus below. So we should be taking short here. This one is a win. So win. Okay. So on the next day. Oh man, imagine if I held this all the way down to these lows. I'm in crazy risk reward ratio. Let's see, I guess that's why you would have hold it until price crosses back over. You would have took all of this move. So our strategy is probably a good idea to hold it for, actually no. He would have closed it here. And then he would have took another one here. Put that all the way down. It's a good strategy. For sure, you will make money trading this strategy. We'll go through one more, and I'm going to fast forward through all the rest of the trades, and then we'll go over the results. 5 a.m. And this is an ugly price action right here. This is why I avoid waste time in. Still really ugly. Really ugly. I wouldn't trade in this price action. Or now we are in a sell position anyways, right? No, we're in buy. We'll wait for this to clear up. This is too ugly. We are in, I think we're in buy condition. Yeah, so this was sell. Next one's buy. So we're in buy condition. Price closed above. Let's go ahead and take this. Go below this swing. A pretty big trade. See how she plays out. Got another win. The risk management and trade management he would have executed, he would have closed his trade off around here for a break even. That's why I just like having a set risk reward ratio. Even though sometimes you're going to miss out on a lot of profits, I'd rather have a set. And I personally go for 2.25 with my trading strategy. But yeah. So let's go to one more. And then I'm just going to fast forward the rest of the trades. Let's go to the next day. 4. Okay, let's see. We are in buy conditions. We're on sell. This would have been a trade I took. I fast forwarded too fast, but you're in sell condition. 630 candle, closed. So next one is 635, short position, above the swing, 1.5 to 1. You must lose a loss. That's pretty much how the strategy goes, and I'm just gonna go through until June, June at the end of June, and then we'll see what the results are. We just finished up back testing this best trading view indicator scalping. It's 96.8 win rate scalping trading strategy by My Trading Journey. And the results I got were 1%, 53.4%. And mind you, this is trading the New York session open. I only took one trade per day. I traded after the 9:30 candle closed, trading the 5-minute chart, SP500, one trade per day, quarter two only. Not Heiken Ashi candles, which is what the strategy tells you to do because we can't bar replay Heiken Ashi candles. So I did normal candlesticks, and these are the results I got. 53%, that's still really good. Look at these returns, 19.7% gain. That is really good for a quarter. Most traders don't make any gain, and this is 20% in a quarter. The strategy is good, and this is trading one trade per day. That is really good. You're averaging what? Averaging 6.6% a month. That is, and this is risking 1% too. Imagine if you risk 2%. This would be 13% gain. This would be about a 40% gain in a quarter. That's crazy. That's really good. Averaging 19 trades per month. And this is subjective depending on your account balance. You really want to look at the percentage. Let's go through month by month. Oh, I'm sorry, we traded April. There was a period where we hit quite a few losses back to back, 1, 2, 3, 4, 5. So we were in 5% drawdown at one point. Actually, I think 6 because it went into the first trade of May was a loss. So 6% drawdown at one point. But after that, we kind of got back to a normal groove, had a nice winning streak here. So overall, I would say this is a good strategy. It removes a lot of subjectivity in your trading, which is what you want. It's easy to follow. The rules are simple. You can repeat this. Just take one trade a day, 2 trades a day. Super simple. I would say, yeah, this is a good strategy. Not obviously done 96.8 because no strategy will ever get you that, but still a good strategy nonetheless.